Welcome to Fintech Chatter presented by Tier 1 People, leaders in fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Hello and welcome to Fintech Chatter, the show for all things fintech down under. I'm bringing you another fintech shot, and this week I'm joined by Toby Norton Smith of x15ventures. Toby, welcome back.
G'day, Dexter. Nice to be back.
It's great to have you with us. Seems like an annual kind of get together this now. We're here to talk about Xccelerate, but for those, I guess, listeners who are new to the show or perhaps didn't listen to last year's episode where we talked about the Xccelerate program, do you want to share with us a little bit about, first of all, x15ventures, who you are, and then the Xccelerate program?
Sure, very briefly. We're X15 is a venture scaler. We build, we buy, and we invest in ventures and help them to scale through access to the assets of CommBank. We're the venture arm of Commonwealth Bank. So that's our mission. We've been around for about 3 years. We've got a relatively small portfolio of companies, 11 at the moment, compared to sort of traditional CVC. That's partly because some of those ventures are owned and operated by us, which is a little bit, unusual, that aspect of our model. But 3 years in, we're really happy with the progress we're making.
Cool. And what are some of the portfolio companies that you've got?
Oh, yeah. I mean, broadly, two buckets that we play in. The first is fintech, unsurprisingly, given we're owned by a bank. And sort of even if you double click on fintech, it's both things that complement the portfolio of financial services that CBA offers. An example of that would be Kit, which is a kids money app. And then also fintechs that actually compete directly with CommBank. Unloan, our digital mortgage business, would be an example of that, where if you like, it's a little bit of a Jetstar to CBA's Qantas offering. So that's bucket one, fintech. Bucket two is a very broad one, sort of in ex-consultant language, I'd call it adjacencies. Everything in and around the banking experience for which a customer's relationship with a bank may be a relevant introduction to an additional or complementary service. So that's a very broad definition. What we've learned over the years that you actually have to, it's actually a narrower range of products than you might imagine, for which customers, when they log into a bank app or are talking to someone in a branch, another service is relevant and they think a bank's a relevant point of introduction. But we've got, for example, a Home-In is a digital conveyancing business, obviously quite relevant when someone's buying a home and getting a mortgage to also work out who you're, how you're going to settle on the home. So we offer that service. We've got a bunch of businesses in that space that you could see on our website.
So what the Xccelerate program, can you kind of provide a little bit more color about, first of all, what it is, and then I guess kind of who typically would go through that program?
Yeah, if you like, Xcelerate's been around since we launched X15. It's our program for slightly earlier stage ventures who we don't think are sort of yet at the stage where they're ready for the heavy handling involved in, plugging in and getting the distribution access of CommBank. They're not at that stage of maturity, but it's about earlier stage companies and sort of helping them explore what that pathway to partnership might look like. So we think of it as a, expedited investment process for earlier stage founders. And really, if you go through the program, we will answer two questions with you. The first is, is enterprise partnership right for your venture? Yeah, and absolutely categorically for a bunch of ventures, the answer should be no, or maybe certainly not yet. But for those that enterprise partnership looks like a good pathway, be it distribution, be it investment, any number of things, the second question we then answer is, are there any no regret steps you can take right now to get yourself enterprise ready? And we typically discover that there's an enormous amount of conscious and also unconscious choices that early stage startups take that can make them more or less attractive to corporate partners.
Okay. interesting that you kind of mentioned that first point, because it's actually something that I'm having not only more and more discussions around, but the briefs that I'm receiving from clients. There's a strong emphasis on partnerships, and I think they're, certainly from a, fintech startup perspective, the kind of holy grail is a partnership with a major bank that's going to solve all your problems. And oftentimes it can actually create more problems than it does opportunities. What are some of the things that kind of you would, kind of not warn people of, but just to kind of set their expectations right around what a partnership with a bank like CBA can offer and what it can't offer?
Yeah, it's a good question. And I think you nailed it by saying setting expectations. If you think about the trade-offs involved here, obviously what you're seeking to gain from that partnership, I mean, not in every scenario, but is typically like enormous, scale, be it scale of distribution and reach to customers, or potentially its scale of, access to capital or brand. And so obviously that comes with an enormous trade-off, which is the burden, appropriately high regulatory scrutiny that banks face from the regulators. If you are then party to working with a bank and you want your product distributed via the bank or introduced to its customers, you effectively then sign up to that standard. So a lot of the expectation setting is around the sort of shift in mindset around sort of risk management and compliance. Now, it'd be a cliche and sort of, wrong in the extreme, in the absolute, but still worth sort of using that sort of old cliche and sort of startup land of move fast and break things, clearly is not a standard or a mantra that works well for sort of mature, not just banks, but any corporate enterprise and looking for who they want to partner with. So it is a big trade-off. I mean, obviously startups have lots of trade-offs to make. One of them is the time of the founders. And, corporate engagements, if you don't go about them the right way, if you don't understand, all sorts of things, the right pattern of decision makers, whether you've got the right strategic alignment, whether, even on a basic first pass, you're going to sort of meet some of the threshold questions around privacy, around data security, around cyber, can be a tremendous waste of time as well. So that's partly why we set up Xccelerate, to help people get a little bit more street smart around what it takes, what the benefits are, and what the trade-offs are that you've got to be ready for.
And look, I think what you've just talked about is, was I think one of the kind of real hooks in you and I connecting as people and developing a friendship, right, was because of that, I guess, care and forethought for founders and the challenges that they have, and making sure that, and I think, to keep setting expectations, even with all of that intent and, kind of care and attention, there's still massive complexity in partnering with a bank. So it's not just a case of rocking up and, hey, let's plug in within 20, 30 days, you're rocking and you got access to 10 million customers. There's a lot to navigate, right?
And it's not always successful. And really candidly, Dexter, I came from a place, I have had my very spectacularly unsuccessful startup experience myself. But after that, I worked in CommBank in the digital arm of the business. And I won't name any names, but, I didn't always feel great about the answers that I was giving founders and external third parties. I could see just the tremendous opportunity. I mean, again, it's almost a cliche, the opportunity of bringing corporate and startup closer together. And that was my job. And partly the genesis for why we set up X15 was to find a better way where you've got a bit more of a fit for purpose vehicle, which, has a tech and operating stack which sits outside of the big corporate, but has the relationships, the policy alignment and technology integrations into the bank. And that's sort of the model that I've been trying to push. And, 3 years in, it's still early days, but we do have, emerging proof points of ventures that are getting real traction with that model. So,
awesome.
So we're certainly full steam ahead.
Great. Now, I want to talk about this year's program, because each year you have a theme. Last year it was payments. Is that right? Was it payments
last year was Australian payments.
Yep. This year, what's the theme?
Helping advance Australia's transition to net zero. So it's all about climate tech.
Wow, awesome. So, first question is, that's not fintech, is it? Or where do you see the kind of parallels?
No, good question. So it would fall into that second bucket that I mentioned, the sort of very amorphous adjacencies. Look, there's a huge opportunity here. You know, we've been talking about the gap or the opportunity to close the gap between corporate and startup. I think that's probably more true in climate tech than almost anywhere else. I mean, a few stats I heard recently, since 2020, there have been over 200 climate tech startups established in Australia. 78% of them are still at seed or Series A funding level. So I think it's quite an immature market relative to some of our global peers, but it's obviously a hugely nascent market. Now, our friends at Climate Salad, Mick and Co, sort of shared some stats with us. The number one thing climate tech startups are calling out for is investment, unsurprisingly. The number two challenge they've got is finding customers. And so, very, very generically, those are both problems that corporates, forget about banks, corporates generically, I think, have an opportunity to help with. But if I then sort of double click on that gap, I mean, I think corporates, generally speaking, I'm not a climate expert, far from it, I've got to be clear, they all have appetite. I think we can see that to do more. But, particularly with the fear of sort of, greenwashing and the very real risk of that, I think all corporates know that they need help. They need help with measurement, with traceability, with the actual solutions specific for their industry to, reduce emissions or to offset them. So, there's a tremendous amount of help corporates need if they're going to lean into this space with any authenticity. And that's certainly true in the banking sector where, I've heard the CommBank CEO, Matt Common, he's shared that for Australia to reach net zero 2050 goals, they estimate will require an incremental $3 trillion in lending to help the economy transition to net zero. You put that in context, CBA is the largest bank in Australia. Its balance sheet currently of all the loans, residential and commercial, is a little over $1 trillion. Yep. So to answer your question in very long format, that's not fintech. No, not directly, but there is a huge requirement for capital to be deployed into the economy to help in a shift towards net zero. Banks obviously have an interest in doing that well, but they can't do it if they don't have partnerships with players who, again, can help with measurement, generation of credits, traceability, all the things that are needed to ensure that sort of that capital is deployed, effectively and into the right companies.
That's a scary number, right? Because I think $3 trillion is there or thereabouts the total sum of Australians, the whole Australian superannuation system, right? So that's a significant amount.
Yeah, but it's right. But it also excites me too, because it's always great when you get alignment between things that, like, I don't need to tell anyone on this podcast about the, my personal view, at least, the sort of the moral imperative and environmental imperative for getting active on climate change. But it always excites you when there's alignment of those interests with, candidly commercial interests. And, I was speaking to a senior lender the other day. I won't name any names. And, his summary was, in many of the main industries that banks lend to, as a general rule of thumb, customers who have a plan for how to reduce or be lower emissions for whatever their relevant industry contexts are probably going to be better prospects to lend to, which I thought was really interesting. Be it, in property, for example, you may have higher quality buildings or better quality tenants. In agriculture, for example, you may have more resilient farms and, new revenue streams if you're thinking about net zero. So it's really interesting to see that there's a lot of opportunity there, but it is a huge number.
And in terms of the types of, I guess, businesses that and founders that you're looking to connect with on the program, like, have you got some ideas in mind or kind of profiles in mind?
Yeah, I mean, maybe types of founders or companies generically were sort of like we normally say pre-Series A. One or two of the sort of winners of the program will look to deploy a safe note into them. Relatively small quantum. So sort of we typically say pre-Series A. Clearly they've got to be a founder who is looking for more than that investment and thinks or has a hypothesis that there may be a real opportunity for working closely with corporate. Now, it doesn't necessarily need to be with a bank or with CBA, but sort of who is open to that. Some founders will absolutely, and I get it, be, emotionally and logically in some cases saying, no, I've got to build this thing my own way, and the less time I spend getting distracted by corporates, the better. So certainly someone who's got an open mind to that and whose venture is sort of at probably still a fairly early stage, they need to, our preference is for them to be in market. We'd rather they were post-revenue. So that sort of sweet spot. And then in terms of, for this program, specific areas of sort of climate tech, look, we've put up on our Xccelerate website some of the thematics we're interested in. Again, they are pretty broad, because if you think about partnering with a bank, there's both the sort of direct tools that a bank may need to deploy. For example, I've talked a few times about sort of measurement and traceability, obviously very important. But then actually, I think the bank will be interested in tools that they can take to their large customer bases, be it consumers. We've already got a partnership, for example, with Kogo and the CBA app. Whether they can take it to those customers or their institutional client base. So it's a pretty broad list, but for anyone who's interested, just hit the Xccelerate website and you'll see.
Yeah, we'll put a link in the show notes to that, folks, so you can access that. Now, last year, we actually, I think we did a follow-up show where we had yourself and the winners, Jacko from Patron. Only a few months ago, I think they announced some major news that they were acquired by OFX. So a huge kind of success story that I'm sure you're not going to kind of take all the credit for that kind of outcome. But I think it goes to show that, first of all, I think the kind of caliber and quality of startups that are coming onto the program. But also, look, I guess, the kind of, it's not, success doesn't necessarily have to be that you're plugged in CBA's 10 million customers and off you go. There's a lot of great benefits that can come from going through the program.
Yeah, no, we certainly can't take much credit, Dexter, to be honest. Patron was a brilliant business and remains one. Congratulations to the founders. It was a great, I think it was a great exit for them. It was particularly impressive given, the timing and what a difficult sort of capital markets it is for, fintech and startups more broadly. So hopefully in some way we contributed to sort of getting them match fit for corporate partnership. There's no more extreme corporate partnership than being acquired. And so, we were really pleased with that outcome. And yes, absolutely, it doesn't have to be an outcome with CBA.
Now, wanted to have a chat before we wrap up, Toby. Big announcement this week with Commonwealth Bank's record profit announcement. The kind of press will tear it up whichever way they want. My view is any of Australia's banks, particularly this year when we've seen bank runs and banks fail, I think is just a really strong sign of the banking system here in Australia. And I just wanted to kind of give you the opportunity really just to talk about how everybody's feeling at the bank, how you're feeling at X15, what your commitment is to the fintech community here in Oz, and look, the kind of the vision and the commitment that you had when you first launched X15 is still there.
Yeah, thanks, Dexter. I won't comment on how CBA is feeling or their results. That's for them. But I think happy to comment on how X15 is feeling and sort of relative to that. Yeah, you're right. We're feeling incredibly positive, to be very candid, and you might expect that I would say that anyway. Maybe talk to that with some examples or numbers. I think I've never been shy about acknowledging that our model is quite I like to think of it as being strategically very closely aligned to our LP and parent entity, CBA, but operationally decoupled so that we can get the best of both worlds, which I think makes sense to most people. So yes, one thing that has evolved is, I would say, the ambition, and I can categorically say the investment from CBA, has grown every year of X15's operations, and it's ahead of my expectations when we launched X15. And that's, however, we've probably deployed our capital a little bit more narrowly, making sure, particularly in this climate, that some of the ventures that are getting traction, like, we properly fund them and invest in them for them to really scale and win in their category. And so, you're right. There's a little bit of commentary on, I think, initially we sort of said, hey, look, we'll commit to 25 ventures in our first 4 years. We won't hit that exact number. I'm not in any way embarrassed about that, because the actual investment and the return on that investment is exceeding our internal measures. CBA's results, they actually spoke quite a bit about some of our ventures and their role in the results overall. I think Unloan, our digital mortgage business, they called out we've just ticked over $4 billion of fundings in our first year of operation, which, we're pretty pleased with that. Home in our digital conveyancing business that I mentioned earlier, that's just ticked over 4 billion of homes settled. So customers using Home in to settle on a property. A bunch of other ventures actually were called out in the results. So that's really, really pleasing to me. It's pleasing because it speaks to the strategic alignment that is not a one-off task. You can't just announce yourself as a venture arm and assume that your alignment remains. You've got to keep reinvesting in that. So pretty confident about that. In terms of our role in fintech community in Australia, look, we are, I hope, seen as big supporters and contributors to that community. We obviously unusually own and operate a bunch of ventures, but that means we are hiring, a material number of, engineers and designers and all the usual skill sets you'd expect in this space. And so a big contributor, hopefully, to Australian grown talent and businesses. We obviously partner with a lot of fintechs. A lot of our businesses are consumer focused because of the sort of natural leverage we get from CBA. So that means, great companies like, who can I think of? Frankie, for example, we work closely with, WeMoney, a bunch of different, B2B2C fintech suppliers we work with. So we're certainly invested for the long term. We've definitely got the backing of CommBank. So feeling pretty positive.
Fantastic. Well, Toby, it's been really good to catch up with you. I'm sure I'll see you at Intersect. Before we wrap up, when do applications open? When do they close?
Applications are open. And have been coming in really nicely, actually. Normally, you sort of expect the rush in the very last days. That's not the case this time. They close on August the 22nd. Cool. And that will definitely be a hard close for anyone who thinks they may send one in the day after. I would really encourage people, though, to put an application in. In my experience and from what I've heard of people more qualified than me, the process of putting in an application is good for sharpening up your own proposition and thinking. And obviously, I'm a big fan of the program if you do qualify for it. So please get your applications in August the 22nd. If you've got any questions on whether you're a good fit for the program, please hit me up on LinkedIn or hit our website and drop us an email. I'm very happy to have a chat so that you understand whether you're a fit.
Perfect. We'll put links in the show notes, folks, so you've got easy access to those details. As always, you can connect with me on LinkedIn and Twitter. If you're new to the show, it would really help us if you could give us a follow and a like and maybe share on your social platforms. If you're coming back, thanks for your support. It really does mean a lot. Until the next show, keep well. Fintech Chatter is produced by Tier 1 people, leaders in fintech executive search. We'll find world-class leadership talent to build world-class fintech ventures. And you can find us at tier1people.com.